Good afternoon, Strategy Vault members. This is James. We're going to continue with our educational series in reference to how our chart is set up and how it works. As you remember, or if you didn't view the previous educational video in reference to Heiken ash candles and how they work, make sure you go back and view that so you can catch up with us and know exactly where we're at. So building off of last week's video with the Heiken ash candles, this is where we left off at. So next, what we're going to do is I'm going to show you what else we add on to our charts and what we use them for and what they mean. But as with always, please stand by for our disclaimer. So just go ahead and take a moment and read this disclaimer in reference to our trading system, and per the CTFC and the SEC and the NFA and all the government associations out there require that we post this to you and fully exclamate that you can and will lose money in the financial markets. There is not a 100% method to win every trade that you're in, per se. So make sure that you understand this, that you can and will lose money in the markets. So take a minute and view that, and then we'll get back on. Okay, traders. So now we're back at our chart with the Heiken ash candles set up. We're on a 15-minute chart here. It doesn't really matter. So as far as the time frame in reference to what we're trying to show you, okay? So what we're going to do now is we're going to go ahead and we're going to get rid of these Heiken ash candles. I'm just going to change that to a line. Okay, and they're gone. Okay, the next thing that I'm going to add, which is the next instrument that we use on our charts and is actually implemented in the system script that we had created, of which you're more than welcome to. You just need to get a hold of us and we will share it with you. So I'm going to go ahead and okay, so what we have here are the Bollinger Bands. Now, yes, the Bollinger Bands have been around for quite a while. There is a reason, you know, all these old indicators per se that aren't the newest and hottest thing. There's a reason why they're still around, because they work. Okay, so the Bollinger Bands. So the Bollinger Bands are set up to where there is a median or middle moving average, and it is based on historical value of the last 20 periods. So the last 20 periods of the 15-minute chart here, this is where price has been moving to. Okay, so now bear with me. I'm going to pull up a bell curve for deviations, for standard deviations. Okay, so what I want you to see here is this is a bell curve for standard deviations. The trading is all about math and mathematical formulas and calculations. That's how it works. That's how algorithms are created. That's how you know, all the institutional players their automatic systems work is all due to numbers. Okay, so what I want you to see here is right in the middle of the bell curve. That would be our median. That would be the same thing over here as bear with me. Okay, I'll show you that. Okay, so that would be the same thing as on the 15-minute chart as our 20 moving period average would be the median here. So what this is stating is that there is a 99.7% chance that price will stay inside of the +3 deviation and the -3 deviation. So that means that price is going to come all in between these numbers here. So, and what it's stating in reference to the 2 deviation is there's a 95% chance that price is going to stay within inside those 2 deviations. from the median price. Okay, so which is where we have our instrument set at, which is the 2 deviation. So we know that price is going to stay within those two upper and lower deviations, which is the -2 and the +2. Okay, so now we're gonna put all this together the best that I can on the chart so I can show you exactly what I'm talking about. Okay, traders, so now what I've done here is I've turned this bell curve on its side so you can understand what I'm trying to show you in reference to. So our settings are the 2 deviation, the positive and the negative. This is our bell curve. The white line here is the median, which is the same thing as a red line on our chart, and as you can see, it moves. Okay, so what I want you to see and understand is this, and I'm gonna move this. It's not gonna be perfect by any means, but I just want you to get the gist of it and understand how it works. So this is our bell curve, and see, as I move it, I'm just gonna try to stay the medium and follow our lines. Now, as you can see at the top and the bottom, or at the 2 and the negative, the +2 and the -2, how it's staying right with our bell curve. Now, as I move it and come on down, now as you can see, the right here where the lines, the upper and lower levels widened. So what we have to do here is blow up our bell curve just a little bit. I just want you to understand what I'm trying to show you is that we have the negative and the positive, and this is where price follows, or should follow, or likes to follow, should I say. Okay, and I'll show that to you on the next slide here. So now we're back on our chart. I don't have the bell curve on here anymore, but the top Bollinger Band is the +2, and the bottom lower Bollinger Band is a -2 deviation. Once again, the middle is our historical 20-period moving average. Now, if I come in here and I've got price blacked out so you couldn't see it, so you can just understand this instrument that we're using right now. Now what I'm going to do is I'm going to turn on the Heiken Ashen candles, and as you can see how price followed and stayed within side of the +2 and -2 deviation. This is on a 15-minute chart. Okay, so we know when price gets down outside the lower -2 deviation, then it really has nowhere to go except for to come back up. And the middle moving period is a magnet for price to go to. As you can see, it always wants to go back. Now, when price gets, or when the bands squeeze together, that's showing a loss of volatility, which means that the market is getting ready to make its next move. Okay, there's a lot of buy and sell contracts being traded at this point, and then after that the market will make its next move once those contracts are exhausted. So as you can see on the 15-minute chart, price went ahead and came on down right outside the -2 deviation on the Bollinger Band. Okay, so this is implemented within our system. It's all set up for you along with our other automatic indications in reference to the conditions that we look for price. This is a second step in reference to understanding our charts and how they work. Like I said, you are more than welcome to install our scripts if you have a Trading View platform that you use. If you would like to do that, just get a hold of us and we will send them to you. So once again, if you have any questions or feel more than welcome to get on board this. This is James from Strategy Vault, and this is video number 2 in reference to how our charts work in your educational series. Everybody have a great weekend, trade positive, and God bless.